Okay, so question number one. Canada Revenue adjusted my returns and say I owe them another $900. They changed my foreign tax credit calculation on my returns, and I could only get 15% US tax on my US pensions. My accountant said that it wasn't worth the fight with CRA, and I had to pay the amounts. Do I need a second opinion? Okay, so I think I know what happened. And with a lot of these questions, I don't have full context, so I'm going to do my best to answer them. But if I'm missing some information, it's going to be tough. So if for some reason I don't answer your question the way you think it probably should be answered because I'm missing that info, just shoot me an email. So in this case, it sounds so what happens when you claim a foreign tax credit on your Canadian return, and we know that clients know this, you often get a review letter from CRA. So let's say you claim a $2,000 foreign tax credit on your Canadian tax return, you e-file the return, in April. You get to June or August or even September, or even we're getting these still in the fall, CRA will send you a review letter saying, can you please show us the calculations for the $2,000 foreign tax credit. Now, in this case, that's probably what happened. They probably received the letter. They sent in either their US, I'm going to assume in this case that this is a US citizen living in Canada. So they sent in probably their US return or a transcript showing how much US tax they paid. And they likely have gotten a response because it's been assessed here, and they know they owe a specific amount of extra tax. They likely claim more than 15%. So why can you only claim 15% tax on US pensions? So and once again, we're going to try not to get too technical today, but just generally speaking, so for Canadian residents that earn US pension income, the top rate of tax in terms of withholding or just tax that you should be paying in general under the treaty is 15%. So let's say they actually paid 20% on their US tax return on their US pension. Then they try to claim 20% tax on their Canadian tax return. CRA would only give them credit for 15. So that's probably the difference. The difference is them just kicking out the difference between whatever makes up the $900. So the difference between 15 and what they claimed. And then the question, well, how do you resolve this? So likely, if that's the case, the Canadian return now is correct because they've adjusted it. What you have to do is go back and correct the US return. So the way it should have looked on the US return, you should have only paid a maximum of 15% on the US pension. And the way you do that is you use that form 1116, which is the foreign tax credit form on the US 1040. And there's a bunch of different pools and different, not ways in which you do that form, but there's different pools of income for that 1116 foreign tax credit. So there's a general pool, there's a passive pool for investment, and then there's a resource pool. And all the resource pool does is reduce specific amounts of tax on specific income down to the treaty rate. So you would claim a resource foreign tax credit on the US return to get down to 15%. So if you do that, then the result should be you pay 15% on the US pension in the US, and then you pay whatever tax you pay in Canada, and you get credit for 15%. So long story short, it looks like CRA likely made the right adjustment. The accountant, so I would say the accountants, if that's the case, I would say the accountant's wrong. I mean, it's not even a fight with CRA at this point. It's just a matter of adjusting the US return. So it sounds like CRA is right. Once again, if I got any of that wrong in terms of the fact pattern, let me know. But I think that's what happened.